Hey, welcome back. It's JWalter here. The goal of my YouTube channel is to create videos that you want to watch and also videos that you're going to get a lot of value from. Therefore, I posted a poll on my YouTube channel to see which topics you wanted me to cover, and the vast majority voted for an update regarding home prices and what you should expect over the next few months. Therefore, the topic of today's video is just that. Will home prices reach record highs going into 2022, or will mortgage interest rates rise enough to slow down home buyer demand and even decrease home prices? I'm going to dive into what's happening right now and what could happen in the next several months. Let's first talk about housing inventory because that has a huge impact on our US housing market. When there's a surplus of houses for sale, home buyers have more options, and this could drive down home prices as sellers are forced to compete against each other. However, what has been happening for years now, and especially more recently, is that sellers have the clear advantage over home buyers because we have an anemic supply of housing inventory. Low supply mixed with record low mortgage interest rates is one reason why home prices have been skyrocketing since mid-2020. And I hate to say it, but conditions for home buyers right now sadly has not improved. So for example, Redfin reported in their most recent data that the number of houses for sale fell 17.8% from a year ago, and that's very close to an all-time low that was set in February of 2021. As of the end of November of this year, there were only 1.3 million houses for sale in the US, with just over 2 million in November of 2019. This issue is also widespread across most of the nation as well. So only 4 out of the 85 largest metros that are tracked by Redfin posted a year-over-year increase in the number of houses for sale in November. That was Detroit, Milwaukee, Austin, Texas, and Tacoma, Washington. The biggest year-over-year declines in housing supply were Baton Rouge, Louisiana, Salt Lake City, and Sacramento, California, where I'm a real estate agent. The dip of housing inventory obviously means there's less houses available for sale for home buyers, but it's also an indication that houses are selling at a faster pace than homeowners listing their houses for sale. According to the most recent data that we have from the National Association of Realtors, which is for the week ending December 16th, the amount of pending listings, which represents a signed contract between a home buyer and home seller, was 1% higher from 1 year ago, whereas the number of active listings was down 21% during the same time period. And as you can see here, the trend of more pending home sales than active listings has been in effect ever since May of 2020. And the gap has been increasing in recent weeks. This means that pendings have been accelerating while inventory has been falling further. And check this out from the National Association of Realtors. They're saying, of course, that demand is outpacing supply, but there were 11 new pending home sales for every 10 new listings for the week ending December 5th. What this basically means is that for every 10 new houses listed for sale, there were 11 contracts signed, and this is depleting housing inventory. This is the highest rate since January of 2021. We're also not seeing a giant influx of new listings to hit the market. So according to Redfin, the number of newly listed houses dipped by 6.6% from 1 year ago. And this is causing houses on average to sell very, very quickly. So 22 days on average this November versus 45 days in November of 2019. It's clear that the demand for housing right now is outpacing the amount of houses we have for sale, and that's why the month supply is only at 1 month. This means at the current sales pace, all houses listed for sale right now would theoretically be sold in only 1 month. Now keep in mind, a market of 4 to 6 months is considered a balanced supply, with fewer months indicating a seller's market, and more than 6 months indicates a buyer's market, where buyers have the advantage over home sellers. And just to give you guys some perspective about how long it's been since we had a balanced real estate market, have a look at this. This is over the last 5 years. The month supply of houses never surpassed 4 months. In fact, it peaked with a 4-month supply in January of 2019 after mortgage interest rates increased to 5% in late 2018. In other words, it's going to take a huge decrease of home buyer demand and a huge increase of housing inventory in order to approach a balanced real estate market where neither buyer or seller has an advantage over the other. On top of this, mortgage interest rates are still at historically low levels. The average 30-year fixed-rate mortgage is 3.17% right now, not far higher than the all-time low of around 2.75% in January of this year. In looking ahead, despite affordability issues, we are still set to start 2022 with a high amount of home buyer demand and a very low amount of housing inventory. Now, don't get me wrong, I'm not saying that the housing market and home prices are going to be increasing forever because, in my opinion, this pace, of course, is not sustainable. In my opinion, we could see home prices continue to rise and records being broken for the first several months of 2022. This, of course, is with the assumption that we won't have a giant leap of mortgage interest rates anytime soon. With that said, let's talk a little bit more about home prices and what we should expect going into next year. According to Redfin, home prices are just shy of all-time record highs. The median sold price for 400-plus U.S. metros increased by 14% from last year and 29% from the same time period in 2019. According to Redfin, home prices have been increasing fairly significantly this year since mid-October, which is unusual for this time of the year. For example, in 2019, prices peaked in July and more or less slowed for the last half of the year. But that's not what's happening this year, as prices are near all-time record highs once again. And houses in the US are still selling very quickly on average. So the share of houses that went under contract that had an accepted offer within the first 2 weeks was 42%. What this basically means is that 4 out of 10 houses listed for sale accepted an offer within the first 2 weeks of being listed for sale. In 2020, it was only 36%. And in 2019, it was only 26%. In addition, approximately 31% accepted an offer within 1 week of hitting the market. That's almost double the rate from the same time period in 2019. People are also selling their houses for more than their asking price on average as well. Right now, home sellers are selling their houses on average for 0.4% over their asking price, which of course is much lower than this summer, but the rate has been flattening in recent weeks. This is abnormal because, as you can see in both 2020 and 2019, the sales to list price ratio fell towards the end of the year, which is more indicative of a more normal seasonal slowdown. It appears we're heading into 2022 with a high amount of home buyer demand and, of course, a lack of houses for sale. And to be honest with you guys, I don't see this changing over the next several months. The tapering of the Fed by purchasing less mortgage-backed securities and the potential for 3 rate hikes of the federal funds rate next year should increase mortgage interest rates, but it's uncertain by how much. Most estimates that I've read are forecasting that mortgage interest rates are going to rise to the mid to upper 3s by year end next year. In my opinion, we would need to see mortgage interest rates of over 4% in order to stabilize or decrease prices next year. So for example, if mortgage interest rates rose to over 4% next year and housing supply also increased greatly as well, then that could decrease home prices next year. But I'm not forecasting a housing market crash by any means. However, my crystal ball broke a long time ago, and I am not a real estate market fortune teller. The reality is there are so many things that affect our housing market that are beyond our control. So for example, will the stock market continue to tank like it has over the past few days? Will mortgage interest rates increase greatly next year? And will housing inventory also increase greatly as well? So what do you think? Comment below, I'd love to hear from you. Also, if you got any value out of this video whatsoever, then please hit the like button, I greatly appreciate that. And also consider subscribing if you haven't done so already. Hope you have an awesome day and look forward to seeing you on the next video.